Back in the action once again. Always great to be here with you guys and gals every evening on this newsletter. It's about that time of day again, though. Time to get back to work. We have a lot to prep for tomorrow's trading session. After all, it's Wednesday evening. It's June 26, 2019. My name is Joseph, by the way. And as always, this is your nightly newsletter. Now don't forget, guys, I help traders find high-quality, reliable, dependable trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is to identify the best levels, the best setups, the best scenarios, the best opportunities that we see setting up for tomorrow. That's Thursday's trading session. And we have a lot to cover in tonight's video. We'll talk about the calendar. We have the end of the week, end of the month, end of the quarter coming here this week. We'll also talk about the charts here. Oil, S&P, Nasdaq, gold, and euro. We have so many high-quality setups to talk about tonight, but I'm going to jump into oil first because oil is going to be a tricky one tomorrow. We're coming out of the inventory report this afternoon, and we got a big opportunity to go back up to that big round number tomorrow, but there's one thing that's really threatening to make this party a little bit more difficult than we want it to be. Let's jump into that crude chart here first because I'm going to talk about what crude is telling us here tonight first as we break into this video. First of all, nice big strong break up, and of course we talked about this in last night's newsletter. Very common, right, to get that spike in channel after we see a big spike up. So bull market, spike in channel. What do spike in channels tell us? Spike in channels tell me to look for one very specific location, and we're going to dig into more details on that, right? I want to buy this market. I want to be a buyer on this. That spike in channel is a huge clue for us, right? We talked about this last night on the newsletter. So I want to be a buyer on this right now, but there's one big problem. I've got this trend line, and that trend line, a lot like the euro, we're going to live and die by that trend line most likely tomorrow, and that means I'm looking to buy low. I've got one specific type of pattern I'm looking for to buy low because I don't want to buy into that trend line. And the biggest problem is going to be if we try to go higher. If we try to go higher, there's going to be lots of traps up there. And so I've got really two different setups I'm watching for as we try to go higher. The buyers want to retest that high, right? And of course, as always, right, we're going to break down all of these different setups here tonight on this YouTube video. So stay tuned for more on that. Over on the S&P tonight, S&P is bearish. Not a huge surprise with that big run down yesterday. So that spike up, right? Buyers try once, buyers try twice, and see ya, right back down to retest that low. We know we're bearish here. It's very obviously we're bearish, and wow, surprise, 1, 2, 3, and 4 legs down. So what do you think the chances are we're going to see something similar tomorrow that we saw today? After all, just 24 hours ago, we were 4 legs down on the S&P. So something tells me history is going to repeat itself tomorrow, but I've got one big variable that I don't think a lot of people are seeing right now, and that is that big trading range. We know we're bearish. I want to be a seller up here, but I have to be very careful how I sell into this. I'm going to talk about 3 different patterns, 3 different setups I'm watching for on this. I'm also going to talk about my plan to buy this market. I know how crazy that is, right? But we saw a very big clue into the closing bell here today. I'm going to talk about one very specific setup to buy this S&P. I'm also going to talk about some traps to avoid tomorrow. So if you're an S&P trader, you definitely owe it to yourself to stay tuned here tonight and watch this video. Over on the Nasdaq, something's wrong. Something's wrong. This market is screaming at us right now. Help me. Something's wrong. I'm half joking with you. But remember, last night, right, when we sat here and did the video last night, strong move down. What happens when we see a strong move in one direction? We almost always get that pullback and that retest. What is going on right now? Something's wrong. Something tells me there's something hidden under the surface here, and I think that's going to be the biggest component for tomorrow's trading session on the Nasdaq. I think there just might be a hidden range inside there. I don't think it's been fleshed out just yet, but that of course tells me, much like the S&P, I want to be a seller as the market goes higher. We'll talk about the best setups for that. I want to be a buyer though here now as it goes lower, and I've got one very specific pattern I'm looking for to be a buyer on this. I can also see, you can see a mile away here right now. There'll be a lot of traps to avoid tomorrow on the Nasdaq. And obviously, we'll talk about breakouts, right? We'll talk about if the market reverses and the best way to trade a reversal, right? How do you know if it's a pullback or a reversal? We'll talk about that in tonight's video as well. So Nasdaq, I think the Nasdaq here is trying to pull something over on us, and we're going to dig into those details here tonight on this video. Over on the gold here, gold, of course, we talked about this last night, right? Big, strong move down. We expected to see those bears at least try to make that leg lower, and sure enough, they did. They got that strong move down into a trading range environment. Pretty simple idea here. It's a bear market into a trading range. Bear markets tell me to buy low, or should I say trading range environments, range-bound markets like we're seeing right now. They tell us to buy low, they tell us to sell high, but there is some very important clues though on this chart, and that has to do with momentum from that strong move up, and of course that trend line, right? That trend line, remember, as we always say, that rising support trend line is bear repellent, and so we have to really be careful. I don't want to sell into that trend line. I do want to be a seller on this off the high, but I've also got that big bull move going higher here too. So we have a lot to talk about tonight. It's bearish, it's range bound. I want to sell high. I've got a very specific setup to sell high here. I also want to buy low on this, but with a bear bias to it though. There's one very specific pattern I'm looking for to be a buyer on that. If you're a gold trader, be very, very careful here. Make sure you stay tuned in this before you take your trades tomorrow. And then of course, over on the euro tonight, euro and gold are kind of in a similar situation right now. The short-term trend is definitely bearish overall, as you can see here. We go right into a trading range. Range-bound markets tell us what? They tell us to buy low. They tell us to sell high. They tell us to avoid the middle. But just like the gold, we get some curveballs here, right? I got to be careful. I get some rising support. That tells me one very specific type of sell setup so I don't get stuck selling right into that support level. And of course, we also have that big blast higher here. That blast higher tells me I've got to respect those bulls. We're going to use all of those clues here right now to look for chances to sell high, to buy low. I think you might just get the best trade off this, buying off that low tomorrow. And we're going to break that down quickly here on this euro. So we have a lot to cover here tonight, right? We got some ranges on the gold and the euro. The Nasdaq is trying to pull something over on us right now, and I think that S&P might give us a repeat of what we saw this morning. Oil, of course, right? Oil, of course, has that nasty trend line coming down, and we're going to break all these details into small bite-sized pieces for you. But before we jump into those charts and put all of this plan together for tomorrow, I want to make sure to remind you that right before I publish this video on our YouTube channel and post it on our blog here at Sideways Markets, I always send an email out to our best clients. That way you get a heads up when this nightly newsletter goes live. I want to make sure you get that email. That way you know exactly when our newsletter video goes live, and so you can be ready with the best information to capitalize on these opportunities. And to join our mailing list, to get your name on that email, all I need is your first name, a real email address, and then hit that subscribe now button. And remember, when you subscribe to our mailing list, your job isn't over yet. You still need to go in and check your email, because I'm going to send you a welcome email, and with that welcome email, there'll be a verification link along with all kinds of great resources for you so you can get the most out of our time together on this newsletter. So don't delay. All I need is your name, your email address. Hit that subscribe now button. That will add you to my list. But make sure, though, you check your email for that welcome email, because it's full of goodies and it's got that verification link. And don't forget, sometimes those welcome emails, they get stuck in your spam filter. So check that spam folder if you don't see the welcome email, and make sure you whitelist everything coming from us in the future. And then before we jump into those charts here this afternoon, I need your help. I'm always asking for feedback. You know, I'm always trying. I am borderline obsessed about making this the very best place for new traders to learn great trading strategies. Really, anyone can be a great trader. All you need is the right skills, the right strategy, and the right mindset. And I'm always looking for your feedback. So I have a question for you real quick. In the comment section below this video, drop me a comment and tell me, in your opinion, where you are on your trading journey right now, What's the biggest obstacle standing between you and becoming confident and consistently profitable? You know, we're all on this journey to become consistently profitable, confident full-time traders. We're all at different stages of this journey. Wherever you are in your journey, what's the most important thing that I can teach you? In your opinion, what's the biggest hurdle? Is it software? Is it strategy? Is it psychology? Is it a trade room? Is it having ongoing support and review? I'd love to know what your feedback is and how I can make this video even better in tomorrow night's newsletter. So do me a favor. Give me a few minutes of your time. Drop me a comment in the comments section with what roadblocks do you see are the biggest roadblocks standing between you and becoming confident and consistently profitable. And while you're down there, if you tune in every evening on this newsletter, do me a huge favor and give me a thumbs up on the video tonight, because every time you hit that thumbs up button, YouTube helps to expose this video to other new traders who can obviously benefit from my knowledge as well. So drop me a comment, give me a thumbs up, and don't forget, you can always call me here too if you have any questions about the best brokers, charting software, which data providers I recommend, or maybe you want to learn more about our free trading classes, or you want to join the trade room on a free pass. Call that toll-free phone number. Use that live support tool in the upper right-hand corner. You know, I'm kind of old school, right? When the phone rings, I actually answer the phone. I love talking to my clients. No call centers, right? No big phone trees here in our office. We're a small company, family-run business. We love talking to our clients, and if you call the office, we'll answer the call, answer all your questions, because we all know, right? We all know there's way too much junk on the internet these days, and it's always great to have somebody you can rely on to get the truth and all the information that will save you time, save you money, and help you get where you're trying to go. So don't be afraid to call that toll-free phone number. I'm always here to help. I look forward to speaking with you. But for now, let's get to work here, shall we? Tomorrow, of course, is Thursday, the 27th day of the month. Now, in case it's the first time you're watching here this week, we are going into the last few drops of the month. And this is one of those rare occasions where we have the end of the week, the end of the month, and the end of a quarter, right? We, of course, have the quarters, right? Quarters are March, June, September, and December. So we're going into the end of the week, end of the month, and end of the quarter, which is relatively rare. It happens often enough for me to have picked up on patterns in this stuff. But the most important thing that you need to be aware of is volatility. Volatility is going to increase over the next two trading sessions on Thursday and Friday. And what I always tell my clients in the trade room is volatility. Too much, right, is not good. Not enough is not good. It's all about that sweet spot. So, you know, if the markets get too volatile, have the confidence, right? There's no first place trophy for trading the most difficult price action, right? All that matters in the end is when you feel comfortable. So the next couple days, if the markets are really whipping around crazy, right, because of this end of the week, end of the month, end of the quarter, you have my complete approval, right? My complete encouragement to sit on hands when things don't feel comfortable for you. We all have to trade our own comfort levels. My comfort level might be different than yours. So just be aware of that. You know, don't feel pressure that you've got to be trading even if the markets are really going crazy, up, down, sideways, or whatever. And don't forget, we trade our strategy together every day in our trade room. So if you're looking for a place to make sure you're doing things correctly, making sure you're executing the strategy correctly, come on, join us every day, Monday through Friday, in our trade room. And you can learn more about that right on our website at School of Trade. What else is going on tomorrow? Well, we also know tomorrow we probably will continue to hear more about the U.S.-China trade negotiations. We keep hearing these rumors. In fact, today was almost a comedy of errors, how the initial rumor came out, the rumor was debunked, and then it came back out again, and it was a misprint. So it's been a lot of this rumor mill back and forth between the U.S.-China trade talks, which are happening on Friday and Saturday within the G20 summit, right, in Europe. So we know there is that back and forth potential tomorrow. Really the big themes right now going into the end of the month is obviously the U.S. and China, right? It is, of course, the Iranian oil sanctions, right? Iran and oil. Those are the two big themes here, right, that are happening. I don't think the Fed and rates are going to have too big of an impact into the rest of this week. I think we kind of put the kibosh on that, right, with Powell on Tuesday afternoon. So I don't think that's going to be a major impact player tomorrow, but we definitely will probably keep hearing from Iran. We'll keep hearing from the UAE. We'll keep hearing from Saudi Arabia, and obviously the U.S. will chime in with the tensions developing in the Middle East, and of course the U.S. and China trade talks. Hopefully tomorrow morning isn't as laughable as far as how much those rumors were flying at the opening bell here this morning. So those are the unscheduled, right? Those are kind of the unscheduled themes that are running through this market right now, and obviously we'll keep our eyes and ears open tomorrow to see how those impact us at the opening bell tomorrow morning. Speaking of tomorrow morning, though, how about the scheduled news? Here's what we know we have on the calendar tomorrow. Tomorrow morning, big news there at 8:30 Eastern time is that GDP report. Now, the GDP report is not as big of a deal as you may think it is. In fact, I've told you a couple times this week, in my opinion, the big news this week is going to be Friday's personal income and outlays, right? Based on the PCE, right? The inflation report later on this week. Tomorrow's GDP, what you have to remember is the GDP report has its fingers in so many different pots, right, in this country. The gross domestic product, it's the full output of the economy. And what that means to you is don't expect there to be some acute reaction, some huge market runs off that GDP report. In fact, there's more likely to be a big run on Friday off of that PCE number than there is tomorrow morning off that GDP. So what I always tell my clients is GDP sounds very big. It sounds like we should be gearing up for a big breakaway run tomorrow because of it. But generally, in my experience, the GDP has its tentacles in so many different directions. It's really kind of a diluted news reaction to it. So I wouldn't get too excited. I'll definitely be watching it tomorrow at 8:30, but I wouldn't hold your breath for I wouldn't bet the farm tomorrow on a big move just because of that GDP. Now, maybe we see some GDP numbers that come out outside or, within expectations. Maybe we hear some more headlines right out of the Middle East or out of the U.S.-China trade talks. That might be something that really gets these markets revving their engine tomorrow, but I don't expect that GDP to be the catalyst. And of course, jobless claims, I still wonder why they even have that listed as a Red Star news event, because jobless claims rarely affect these markets any longer. The rest of this stuff is pretty much minor stuff here tomorrow. So I have a feeling tomorrow it'll be U.S. China, it'll be Middle East, Iran, right? Those will be the big market moving events, and obviously the overall, right, volatility increases as we go into the end of the week, end of the month, and end of the quarter. So now that you know the basic idea on this tomorrow, the basic strategy or the basic calendar for tomorrow, let's take a look at some charts. We'll go crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. First of all, what do we know right now on this crude? We know the market is bullish. We also know we've got a strong move down, but it's very obvious these buyers have not walked away, right? That is not what we call a 1, 2, 3 reversal, right? A reversal would have run and really ran off of that moving average. You can see right here, it's very clear nobody's running lower anywhere. So it's definitely not a bear market right now. It's a deep pullback, but it's not a bear market at this point. What else do we know? We also know this oil is, if you count backwards here, 1, 2, 3, and now 4 legs up. We talked about this last night. 1, 2, 3, 4 legs up. What usually happens when 4 legs up? One of those scenarios was what we call a flag pattern, right? Remember this from last night? Well, basically, it's a trend line coming down. What does that flag pattern tell me? Flag pattern tells me I've got to get up, over, and use that flag, right, as a key level of support. Now, keep that in mind, right? We'll talk more about that here as we go. What else do we know here right now? We also know that we have this spike in channel, right? Spike up into a channel. One of the things we talked about last night was likely this spike and channel. And as I mentioned last night, right, you'd probably get a couple shots to buy off of those lows, as people definitely did. What else do we know about spike and channel patterns? Spike and channel patterns almost always give us that deep pullback, right, into that buy zone, right? And in this spike and channel, that buy zone is a pretty hefty pullback here, right? It's a pretty hefty pullback. As you can see, we'd have to pull back all the way into that 58.60 area, right, to buy off of that low. That's a very, very important clue as well. So put both of those clues together. First one, we're 4 legs up, right? We get that falling resistance. You could also call, put a channel there, right? Call this a flag. Again, not a bear market yet. Could be tomorrow, but not a bear market yet. How do we trade that? We've got to go up, over, and in. That's going to be where we call what? It's called a two-legged pullback, or a 2LP setup. Chances are that pattern is probably going to be kind of mixed in with what we would call a failure setup. So let's get a little more intimate with this chart here for a second. I got my trend line coming down. You're more than welcome to call this a channel if you want. The channel's not really that necessary. We go up, we pull back, we go up. I want to go up and then over. Now, here's what likely will look like here. That moving average will come up and come over. The sellers are likely now going to try to sell off of that moving average. And at that point, that's where I can look for a failure into a pullback and a retest of the high. 2 different types of setups here. One is a failure setup. The other is a pullback setup. So again, we've got that trend line coming down. I'm anticipating these guys will want to go up, pull back. When they do that, right, because nobody wants to buy high up here. We don't want to buy high. We want to wait for that pullback, right, as we go. Get that pullback. What's going to happen is that moving average will come over. The sellers here now will try to sell off of that moving average, right? They're going to try to sell this thing back down to that range. And, of course, that's exactly what we're hoping for as buyers, because now we can buy right into those stops, buy the pullback to the moving average, right, and take our profit back up to retest the high. It's a failure setup into a pullback setup. It's a failure setup into a pullback. Now, sometimes we don't get that big move up and that full pullback. So another pattern I'm watching for is a strong 1, 2, 3. If that happens, we don't want to chase after it going higher, because we don't want to buy high, right? I want to buy low in a bull market. I want to buy at support in a bull market. So find that swing low and look for that trap. Trap patterns they require us to have, first of all, a strong signal, and that strong signal will typically want to close right above that moving average, right, for your signal. We'll talk about the specific signals into those patterns tomorrow morning in our trade room. So again, 2 basic setups here right now. One is that 1, 2, 3. Find that trap. Look for that trap low, a trap setup, right? Again, to buy low, don't buy high. The other is we go up, we go over, moving average comes over. Sellers, of course, now try to sell off the moving average. That's a failure into a pullback, and back up we go. What if we sit here going sideways? What if we sit going sideways? If we sit going sideways inside of what I'm anticipating might be a range tomorrow, now I use what's called the 2-try failure pattern. I wait for the market to go up, I let the buyers try twice, and I sell it back down into that range. Or we wait for the market to go down. We let the bears try a second time, and we buy it back in. We call this the 2-try failure pattern. They're excellent for ranges. Again, if you see a range tomorrow morning and we're going sideways, we're waiting for the market to try to go up. Let the buyers try to buy the pullback. We know where their stops are, and we're selling into those stop losses. Same thing goes the downside. Let the market try to go lower. Let those bears try to sell the pullback. It's a range at that point. We're buying back into that trading range. Okay, that's the second scenario I want to be ready for tomorrow. Third scenario, what if we get that collapse back down? Now what do we do? Again, we know we have that spike in channel. That spike in channel tells us there's your buy zone down there. But here's the problem. If we collapse back down, we've got 2 things going against us, right? One is that trend line, and 2 is that momentum. You know, short-term momentum is not easy sometimes. So what's the best way to buy when I'm bearish? right? And I know it sounds bad, right? But again, it's spike and channel. Spike and channel patterns will look very bearish when they pull back. What's the best way to respect momentum but buy as that market's going down? Well, what I want to do is I want to anticipate those sellers are going to probably try once, they're going to probably try twice, and then I can be a buyer, right? I call this a nested variation of that two-try failure, right? It's strong move down, right, to get into that buy zone I mentioned, but then because of that strength, it's so bearish at that point, you've got to expect those sellers to try once, they're going to try twice before they make that run going back higher. But wait a second, we have that trend line coming down, don't we? Okay, what's the best setup I should use to avoid buying into resistance? Oh, a trap. Absolutely. You knew the answer to that, didn't you? Right? Trap low. Now we make a slight adjustment to this now. And now we look for a slight variation of that setup. It's still a nested, but now it's got that trap low, right? We still look for the bears to try once to sell it, try twice to sell it, and we're going to try to pick those pockets, right? Buying as low as we can there. Trap patterns are the key when you've got overhead levels of resistance. So that's the setup I'm looking for, right? And don't be afraid, right? Don't be surprised if it runs up, pulls back, and goes from there. So we may easily have a combination here of a two-try failure or a nested variation. And then, of course, right, that breakout pullback off of that trend line. This would really be the easier one, obviously, once you see it up and back, right? But obviously, professionals will be looking for that buying opportunity as low as possible. So those are some great setups here right now to the buy side. What would it look for a bear market? How does this market turn bearish? 1, 2, 3, reversal. Now, strong move down, pull back to the moving average. Instead of seeing sellers try once, try twice, and go higher now the bears, they pull back and they run. If they can hold that pullback to the moving average, this market now looks very bearish and the buyers have lost all of their control. At that point, I'm going to mark up that low. I'm going to mark up that low, mark up that high. That will create what we call a hidden channel, and we're selling off the high of that channel. Make sense? Okay, so remember, you don't want to just sell it because it goes lower, right? That's like just buying it because it goes higher. Right? I know it's instinct, but we can't follow our instincts when it comes to trading. We have to think like traders, think in probabilities, don't think like human beings. Strong move down, it will take all, right? It'll take all the restraint you can muster not to try to sell that pullback. I know. It's just not a reliable trade yet. It's not reliable until they can prove to us that they can hold that pullback. Then mark up the low, mark up the low, mark up that high, and now we know where that sweet spot is, and we're selling off of that high. That's a 1, 2, 3 reversal into a hidden channel pullback. We may also see a trap up there as well. Wow. We have covered a lot here so far, right? 1, 2, 3 reversals, hidden channel breakouts, two-try rules, nesteds, traps, pullbacks. Oh my goodness. If you're here for the first time right now, your head is about to explode. There's been so much information given, and that's exactly why I want to encourage you to join our free class. In the upper right-hand corner, I'm going to put a link in the upper right-hand corner. I'll also put a big red button right below the video tonight on our blog at Sideways Markets. If you're relatively new to trading, or if you're here for the first time on this video and you want a deeper dive into the same strategy we use every morning in our trade room, you'll learn all my favorite entry patterns. We'll go over the rules. You'll love that free trading class, because really my goal on this newsletter is to make you a better trader, give you the tools, the mindset to become a better trader. And if you're here for the first time, I want to give you all the terminology, all the setups, so you can kind of follow along with me as part of that free trading class, and we can really dig our heels in and make a lot of, make productive improvements every day on this nightly newsletter. So I'm going to keep moving. You grab that free course and I'll see you behind the scenes there. Oh, and don't forget, guys, when you join the free course, very important, when you join that free course, you have to check your inbox, because I'm going to email you over the access, right, to get into the members section of the website. Make sure you check your email, including your spam folder, right? Sometimes those emails, they get stuck stuck in your spam folder. If you find it in your spam folder, make sure you whitelist that email. That way there's never any, there's never any issues getting those emails, because I'm going to send you emails every day with a chart lesson. That way you can keep getting the most of our time together. Okay, any questions on that? Give me a call in the office. I'm always here to help. How about some S&P? S&P, what do we know right now? Well, first of all, we know we're bearish. We got 1, 2, 3, 4. What else do we know? Right? We also know that we're just a little bit below yesterday's low. And this is a really, really important part of this, right? Strong move down. Now, remember, anytime we see a strong move in one direction, we always expect to see that bounce and that retest of the low, right? When I get that retest of the low, at that point now, it's really a timeout, and let's see where we go from here, right? Sometimes we bounce and do it again. Sometimes we bounce and hold in reverse. Sometimes we roll lower and slingshot back higher. And sometimes we roll lower and run lower. So we have to wait right now. I'm not going to pretend like I know the answers to everything, but what I do know right now is I do know we are right at that low, and we have to be careful here, because we had that strong move down from yesterday. We go up and we're right there, right? We're right there. There's no way of telling, right? There's no way for me to be confident right now. I definitely don't want to sell down here. Between being 4 legs down and being right at that low from yesterday, I see zero evidence right now that I should be selling here. I got to wait to sell high, or I have to wait for more information to sell as the market makes another leg lower. So that is what we know right now. We also know that the day finished yesterday in what really was probably a trading range, right? Spent a little bit of time this morning inside of that range. And those ranges, they came right back, and they just got they got their hands dirty again on it again. So that might be a coincidence. I doubt it. That tells me that range. What is a range, by the way? Range is a magnet, right? So we're going to probably end up going back into that range before we end up making that next leg lower. So when I combine these 3 clues, right? We're at yesterday's low. We're 1, 2, 3, 4 legs down, and we're just kind of dangling here below this trading range. I'm really tempted to look for a buy here right now. And then, of course, from there, right, probably look for a sell back down again. So I think if we play our cards right now, we can kind of play this on both sides of the market. So first of all, what would a buy side look like? Well, let's be honest. I've got that trading range. I'm going to mark up the amount of the move below the range, put that up top. We call this what? The pendulum swing. You'll see a lot of examples of the pendulum swing in that free course that I mentioned earlier, by the way. Very, very reliable way to trade ranges, right? The amount of the move below the range is the amount move up above the range. Okay, so that's really where my bull targets are, right? Up around that 29.30. So now that you know that, right, I just want to make sure I can get that out of the way there so I can clean this thing up. Okay, I can also see that, right, that measured move here, right, is right there as well. So this is a major support level down here. This is my buy zone here. I want to buy back up. I've got my major, which is up here, pendulum swing, right? That's where I want to sell back down. I want to stay away from that middle, right? A range-bound market tells me buy low, sell high, and avoid the middle, right? I don't want to trade the middle because that's where the trade's going to want to go, right? That'll be the magnet right there. Now, we just talked about this on oil, right? It's a bear market. I want to be a buyer. What's the best way to buy in a bear market? First of all, make sure you get to a level of support. Okay, you don't want to buy, well, very simple rule, buy at support. Okay, in this case, we have a support level right here. Right, we're sitting right down at major support, right, got a bunch of support levels down here, right, nice low from previous levels, measured move. So if I'm going to be a buyer in a bear market, I better do it at a well-known level of support, okay? That kind of sets the stage. Now, once I find my levels of support, which we are at, now I look for the setup. Okay, what's the best setup? Remember, I have to assume, okay, just like we saw back here, I have to assume when the market's bearish, those bears are going to try once, they're going to try twice to run it back down. They're not going to give up after one try. Right here, right? We run lower. The bears try once. They're going to try twice, right? I'm not making this stuff up, right? Look, right up here, right? Bears go lower. They try once. They try twice, right? So if I'm going to be a buyer on this, I have to allow them to get that out of their system, right? 1 and 2, and then go. And then because I have this trend line coming down here, what I really want is I want to get that 1, that 2, and that trap low, right? That would really be the ideal setup here to be a buyer. Let the sellers try once to sell it short. Let them try twice to sell it short. Again, I've got that trend line coming down that you can see. And that trend line, I've got to look for that trap, right? And again, we call these crown reversals or nested failures with a trap, right? We go slamming lower. We're at level of support. I know I want to go back into that range. And of course, possibly the pendulum swing back in the opposite side. I let the bears try once. I let them try twice. I really want to try to get below that low, get that trap, because that's going to keep me out of trouble from buying into that trend line where I would assume you'll see more sellers coming in. Now, we should see the market chop around back in that range. I'm going to do my best to see if I can hold that runner up to reach that pendulum swing, which is where I'd like to get our target. Now, at that point, right, this will be one heck of a move higher, won't it? Right? So now fast forward now. Right? Fast forward now. We run up. We get through the top of that range now. Now what do? Now, with that overall momentum being bearish here now I can be a little bit more relaxed on being a seller. Right? It's an overall bear market here at this point. We're assuming they don't hold that pullback and take control, right? If they do hold a pullback here, 1, 2, and go, that become a 1, 2, 3 reversal like we just talked about earlier. But most important thing right now, though, is if we do end up running through and back in now that moving average, of course, comes over. We let those buyers try to buy that pullback. Right? These, of course, happen all the time, like this one back here, like this one back here, right? Every time the market goes above the moving average, the buyers try to buy it, and we look to sell right into their failure. That's a very similar scenario of what I'm looking for here tomorrow. Just remember, you want to stay out of that range, right? You don't want to trade inside the range. So you want to see it go up. I want to see those buyers pull back, right? Try to buy off of that moving average. And once that happens, we know where their stops are, and we're looking to sell right into those stop losses. It's a variation of that failure pattern. So again, it's the nested failure because going against the trend, right? And it's the 2-try failure because going with the overall, right, bearish momentum. And again, as I mentioned earlier, if they hold that pullback, right? If they hold that pullback, right? If they hold that pullback now on strength, now we know we have a reversal. Okay, perfect. And guys, don't ever worry about being wrong about that stuff. Just wait for the setup. If it sets up and fails, take it short, right? If it sets up and holds and runs, okay, we're bullish. Now, once we're bullish, now what do? Do we buy high up here? No. We buy where? We buy at support. Where's support? Mark up that high. Mark up that high down to that low. That's your sweet spot. Right? That hidden channel. That's your sweet spot right there, looking to buy the low of that hidden channel. Now, that's as the market goes higher, right? Nested failure, 2-try failure, hidden channel pullback. What if the market goes lower? What do we need, right? What do we need here as that market goes lower? Well, as it goes lower, we need to see them hold a pullback, right? Hold that pullback. Prove it to me. Prove to me, bears, that you've got control here. Prove it to me. Because from what I can tell, we're at yesterday's low. We're 4 legs down. I don't believe you. I think we're going back up into that range. But I'm perfectly willing to be convinced otherwise, right? I won't take it personally if you want to go lower. I just simply have to wait for this to give me proof. Mark up that low. And again, we call this the 1, 2, 3, right? 1, 2, 3. The key is to this is that last run lower. I'm going to mark up that low. I'm going to mark up that low. Up to that high, find that hidden channel, and we're selling off that hidden channel. Where is that target at that point? Big round number at 2,900. That's a big bullseye on that tomorrow morning if those bears can keep this party rolling. So now we've got a lot to wait for here, right? I'm looking for that crown reversal to be a buyer off that low, looking to go up, right, and back down in. Just remember, if we sit back in the middle here, sit on hands, right? If we sit in the middle, sit on those hands And remember, right, I'm just simply drawing this charts up right now, but I've got hundreds of real examples of all of these setups inside that free course I mentioned earlier. There's a big red button on the blog below the video. There's also a big link up there in the upper right-hand corner. And don't forget, tomorrow we're going to execute this strategy together in our trade room. So if you're worried about, how do I make sure I'm doing this correctly? That's exactly why our trade room exists, because it's learning to trade is a lot like learning how to swim. You really can't watch somebody else swim and you become a great swimmer, right? You've got to go out there and actually do it. And it really helps to have somebody there with you to make sure you're doing it the right way. Because, we all know there's money to be made out there. We all know there's going to be great setups tomorrow. The key is, though, it's difficult to apply this stuff when you don't know what you're doing. So that's why I always tell my clients, come join me in the trade room. Let me show you how to execute this strategy correctly. That way you have confidence and you're doing it the right way. Now, red flag, red flag, red flag, right? There's something wrong on this Nasdaq. There definitely is. And as I mentioned in the introduction here this evening, we had a very strong move down yesterday, right? We did see a very strong break higher, right, into a 1, 2, and then collapse back down in. It's very easy to see, right? Those buyers got a boost from those early morning rumors about the U.S.-China trade talks, how laughable that was this morning. I'm not sure if you guys saw those headlines this morning, but basically a typo, which I'm sure the news media made every attempt to verify that language, right? If you don't know what I'm talking about, right, I'll put some information in the comment section below about that typo, and you can indulge in there. But that's basically what led to this whole up and back today was always faithful, right? The news media is always so accurate in their reportings, right? I'm sure they did everything they could this morning to verify that information. The bottom line, though, is we had a big move up. The buyers clearly couldn't hold it once, twice, and then failed. But I'll tell you right now, when a market goes like this and then fails, it does not pit stop for a bathroom break, right? It doesn't stop for the world's best jerky on the side of the freeway, right? It doesn't stop right there. It collapses right back down to that low. So the fact that we're not down to that low right now, and I'm not a big fan of correlations. S&P's back to its low. This Nasdaq should have dropped hard, right? It should have dropped hard. We should not have closed today, right? Anything off of that low, like the S&P. So this leads me to believe that S&P had a range, right? Look back at the S&P here right now, right? The S&P has its range just a little bit above its low, right? I think that Nasdaq is going to set up and develop into a range as well, and it'll probably be somewhere right around here. That's what it feels like right now. So everything I'm going to do tonight, I'm going to assume that range is going to be in play here right now for tomorrow. So really, it's not what happened on the Nasdaq, it's what didn't happen that I think is the biggest clue that we're going to have to use for tomorrow. So what do we know right now? What do we know? We know that strong move down should have had no problem once those buyers failed. I mean, usually those things will sink like a rock, right? Like a cinder block, right? Tied to your ankles and tossed in the Hudson, right? I watch too many mafia movies, I know, right? But this thing should have just tanked right back down to that low. We know that didn't happen. What else do we know? We know the bears have control, right? Big, strong break off the moving average. These bulls are not in control right now. Yes, they had some fun early, but once they got that 1, 2, and that jump off the moving average, this is a bear market now. So we know the market's bearish. What else do we know right now? We know that there's very difficult to find a channel here, right? None of these channels really fit very well, so I've got this hidden channel on here. That appears to be the best fit. Okay, what does that tell me? It tells me sell the top of that channel. Okay, that's what we know. What else do we know? We also know the low of days down here, prior low of day, yesterday's low of day. What don't I want to do there? I don't want to sell there. In fact, if it keeps going lower here, look at that. That's 3 legs down right now, right at that low. So we know a lot about this. What we don't know yet is that exact range. It looks like it's right here, though. Okay, that's kind of the almost no, right? We're almost certain of that range. So we're bearish. We have a channel. We want to sell high. We do not want to sell low down here for the same reasons I discussed earlier on the S&P. Now, knowing that, I draw my range. The size of that range helps me find resistance overhead. It helps me find support below. We call these range expansions, and you'll learn all about range expansions as a client of mine, and I talk a whole lot about them inside of those free classes that I mentioned earlier. So we know that I have a sell zone overhead to sell high. I have a buy zone below to buy low. What does the range tell us? Buy low, sell high, avoid the middle. So now you know where those levels are coming from. Okay, let's put it together. I already know if the market goes lower, I'm trying to be a buyer. What pattern, by the way? Which pattern do we like to use when we're bearish and we want to be a buyer? First of all, we've got to get to a support level. I won't even think about this until we get back down to that low, right? So you've got to go lower. Then sellers will probably try what? They'll try twice. Let them try once. Let them try twice. I'm looking for that trap, right? And that buy because of that channel looming overhead. What do we call this again? We call this a nested two try, or a crown reversal in this case, right? Bears try once, bears try twice, trap low, and go. What if the market sits inside the range? I almost hope it does, because then that will confirm for everybody. And once everybody sees that range, that'll be even easier, right? We go down, nested. Remember, you're going against the trend at this point, against momentum. Make sure you do it off support, okay? Not in the middle of nowhere. Right? That nested below. If we go sideways, right? What's the plan for a sell? Let them go up, right? Let those buyers try to buy the pullback and sell it back in. Okay, now, sometimes that move, let's get this off of here, right? If we go sideways here, right? Sometimes we see a big, strong break out of a range. And when that happens, we want to what? We want to respect that momentum, let the buyers try once, let the buyers try twice, and then sell it. Okay, that's exactly what our plan will be if we get it to shoot, right? So if we see a modest pullback, moving average comes over, buyers try to buy, we're selling into that failure pattern. But if this thing just cranks higher, right? I mean, if it just shoots higher here, now we're still overall bearish. Let the one, let the two. There's no need for a trap in this situation because there's plenty of room below us, right? Now, if this was to pull back and do this, well, yeah, now I do need a trap, right? Because I don't want to sell inside the range. Does that make sense? Right? Makes sense? If I get a modest pullback here, I can look for a failure, right? Failure pattern back down in, right? Price goes up. Buyers try to buy the pullback off the moving average. I know where their stops are, and I'm selling into their failure. Okay, that's one scenario. Second scenario would be strong move up. We haven't held the pullback yet. Remember, the buyers have to hold that pullback before they take control. Okay, if we don't hold that pullback, but they still shoot higher, 1, 2, and go. Now, you don't need the same trap on that particular setup. Just got to make sure they try once, try twice, and you can sell. The reason why you don't need to go that extra step is because there's plenty of space below you. But how about this? How about we shoot higher, we collapse 1, and now 2. Different story now, right? Now we do have concern of where we are. We're back inside that range. Plan your exit before you plan your entry. In that situation, you do need that trap. Plan your exit before you plan your entry. You're never going to be perfect. Nobody expects perfect. We just expect us to understand when there's a range, that's the magnet. That's the target. So when I find myself knocking on the door of that range, I need to get a trap pattern because that trap will keep me out of trouble. Nobody wants to sell down there. They're going to come in and sell it high. Okay, you'll probably have learned that lesson a couple times without even knowing it. Most traders, they take losses because they're not planning their exit before they plan their entry. So those are 3 possible sells. And then obviously, right, I don't care if we go long, but I have to wait for it. We're way too bearish right now. Remember, the bears have control. The buyers have to take control before we can rely on it. Strong move up, pull back to the moving average. This is where the buyers will try. If they fail, we send it back in, right? Buyers hold it and jump. Remember, it's the personality coming off that moving average. That's the key component to be confident this market's bullish now. Once we see that jump up, we mark up that high, and again, pay attention here, guys. I'm drawing off of that major low, not that medium low. right? That creates a sweet spot. That creates the hidden channel. Moving average will come over as well, and that's a very reliable setup. It's a 1, 2, 3 reversal, right, into that hidden channel. Now, what if we go lower, right? What type of proof do I need here right now? This market's going lower. It's got to go 1, 2, and 3 and run. Once we get that, mark up that low, mark up that low, mark up that high. And again, we're selling off the high, right, of that hidden channel. Great stuff here on the Nasdaq. Again, the Nasdaq, it's more what didn't happen, right, than what did happen. Anytime we see a market bounce after being 4 legs down like that and the buyers can't hold it, this thing should, again, it should have tumbled hard back down to that low, but it didn't. And that tells me there's something here. There's something here, right? And I'm leaning on a range here for tomorrow. We'll know more in a few hours. We will, right? Once we get into Asia, we'll know more about that trading range. How about some gold? Gold is bearish. Gold's bearish into a trading range. Okay, what do we know right now? We know we got a bear bias. Okay, every time those bears have tried to take it higher, every time the bulls have tried, they failed. Every time the bulls have tried, they failed. Now, with that said, we also know it's a range. What does a range tell me? It tells me to use the size of the range to find my sell zones and find my buy zones. I want to buy low, I want to sell high, and I want to avoid the middle. In this case, there's a bear bias. So just like we talked about on the E-minis, right, it's a different pattern to buy off the low than it is to sell off the high, right? Why? Because of momentum, right? If I want to be a buyer off the low, I need that nested pattern, right? Because I got to respect those bears. If I want to sell off the high, right, I can use a straight failure pattern. But what else do we know? Yeah, we also know there's a higher low. And those higher lows, what do we do? We draw a trend line. Now, notice that trend line, guys. I'm not drawing that trend line off wick to wick. Okay, one of the best things I've learned about trend lines, when you're drawing a support trend line, it's almost always best drawn wick to body. Yeah, there will always be an exception to every rule, but wick to body for a support trend line. That will usually be where you get the best results. What does that support trend line tell me? It tells me that I can't sell here, right? And what's the best setup again, guys? What's the best setup for me to avoid selling into support? Traps. And so we definitely know that that tells me I got to get off of this low, right? I got to get off this trend line. I got to get some sort of trap high up here. What else do we know? We also know we have this strong bull move up. Okay, what does a strong move usually do? A strong move usually gives us another attempt to go higher, right? Anytime we see a strong move in one direction, we almost always get that second leg. Anytime we see a strong move in one direction, we almost always get that second leg. If that second leg is even stronger, you have to think now, when you combine that trend line coming up, something tells me sellers aren't going to be too eager to sell this, and we'll see one more attempt to go higher. That's what I'm hoping for, and that's where I want to look for my next sell. At the same time, though, right, I want to stay out of that middle, buy those lows, and sell those highs. Now we're talking. Let's put this plan together here. We know we're bearish, but we have a big problem with that trend line. That trend line is a big, big deal. So as we go, right, as we look for that failure pattern is not a very good failure pattern. You're selling right into that level of support, right? And you can see that you didn't have any problems before, right? Up, failure, and go. Up, failure, and go. There wasn't any problems there before, but now we get that higher low, up, failure, no. That's not the pattern that you want. In fact, most of the time, this pattern will end up trapping because that trend line will end up with that. Again, that trend line is a major support level, end up trapping and go from there. That's where I want my sell. I want that trap high. Let those buyers, right? Let those buyers get that second and then sell it right back in right down to that trend line. That trap high is going to be, at this point, the only real way I can sell this market above this trading range. Now, what if we keep going, right? What if that trap keeps going? Then wait for the pullback. If they hold that pullback and run, wonderful. It's a bull market now. Oftentimes, these support trend lines, they result in big reversals. If we get the reversal, wonderful. It just takes some time. Wait for the reversal. Wait for that 1, 2, 3, and buy the pullback to the hidden channel. Targets overhead are pretty easy too, because you get that big range, right, from yesterday's session, right? That big range out there, we get that 1, 2, 3 and go. We're going right back into that 35 area, right, on the gold. Now, that's the plan as price goes higher, right? Price goes higher. Look for that trap up inside that 16.8, right? Trap and go, because again, the best pattern to look for when you've got support levels in your way is to go after that trap. Okay, but what if the market sinks into the range? If it sinks into the range, we almost get an easier job, because now that trend line's pretty much busted up, right? If we sink into that range, now it's just simply a one buyer failure and back in, right? We now go back to those buyer failure patterns that we saw earlier. So don't be afraid for 1 and 2, sell back into that range if we sit there for a while tomorrow. Okay, we could also sit for a while and try to make a run lower, right? That run lower. Now, what's my momentum right now? Momentum is bearish. What's the best way to buy in an overall bear market? The nested pattern, right? 1 try, 2 try, and up from there. We don't have as much urgency there, so we don't need to get that trap, but a trap will never be a bad thing. Just make sure you got clear separation. Make sure you see 2 clear tries, right? A lot of people, what they'll do is they'll mistakenly call this, right, a nested, because it does something like this. 1, 2. If you need a magnifying glass to see those 2 tries, you're probably the only one that sees those 2 tries, and everyone else is waiting for the second try. So really make sure you get 1 and 2. And again, these are those nuances. These are those small little details that working with someone like me in real time as the markets are developing will be a big advantage. Right? Those right there, how far apart do they have to be? What should they look like? How does the moving average respond? Those are the little details that mean big, big differences, right, in your results. The moral of the story, though, is, like I tell my clients, when you get that move down, you don't want the 2 tries on top of each other. Right? You want to see it very obvious, 2 separate tries. 1 try, 2 try, right? Make it clear. Make it easy to see. That way everybody sees it. And then again, if they hold that pullback, right, if they hold it and run, now it becomes a 1, 2, 3 breakout, right? And we've got that next run going lower. So now we've talked about the bull side, the bear side. Let's wrap things up here now, right, on that euro. Over on the euro is in a very similar position to the gold, but I think you'll see it definitely looks like it's a lot easier. And here's why. The first thing is this trend line. Right? That trend line is not nearly as intrusive as that gold trend line, right? You can see that the whole range is wide open still. You go back to that gold trend line on the gold, right? This is a pain in the ass, right? It's not an easy trend line to get around. Those steeper trend lines, right? Within reason, they can really be a pain in the behind. So this one really doesn't have as much kind of urgency to it, if you will. It's not as intimidating, I think would be a good word to describe it, right? In fact, you could easily also say, well, look, it actually looks like we're about to go into a range here. And that's probably the case, right? So we know that trend line's there. We may see one coming down here. That may be the case. What else do we know? Overall bearish into a range. Okay, what does that trading range tell me? It gives me the sell zone overhead. It gives me the buy zone below. What do we do with the range? We buy low, we sell high. It's a bear bias. So what does that tell me? That tells me if I want to be a seller, all I need is a failure pattern. And because that trend line is nice and shallow, it's the risk-reward ratio on that looks great. It also tells me if we go lower, get down to that area of support, then look for the nested failure, right? The 1, the 2, and again, as I mentioned earlier, make sure you see 2 clear separate tries for those bears. And tomorrow morning, we'll do it together. That way you can look over my shoulder and I'll kind of show you what I mean by, right, 2 obvious separate tries. Okay, now, we know we want to be a buyer off the low. I want to be a seller off the high. What else do we know? A very strong move up. This is where I think the euro is a little bit more challenging than the gold, because the euro, it's very difficult not to see that big strong move up. And that strong move up is going to try now to retest that high. And that's exactly what I'm hoping for. I'm going to draw this trend line off those lows, create this hidden channel, and look for a sell off that hidden channel. Now, remember, gold gave me the option for a trap, right? Gold had that beautiful swing up there for a trap. We don't have that on the euro, do we? We don't. So a couple things you want to think of would be, let's say we go down, I can then use that as a trap later in the process. What I'd rather do, though, is go up, get that moving average coming over, let the buyers now try to buy the pullback. We've got the buyers doing their thing, getting their second retest. We're staying away from that trend line. Let the buyers take it higher. Let those buyers sort of buy that pullback. If they're successful, it becomes a bull trend. If not, it becomes just a great chance to sell nice and high. Now, if we have enough room on this, we might be able to get a failure into a pullback as we go. We talked about this combination earlier on oil. If I have enough space on it, sometimes these things, they'll go up, they'll pull back to the moving average, and they'll just collapse, right? So that's a failure pattern above the high of that range. If we get lucky, though, moving average comes over, we get that buyer failure, and then, of course, that same spot where the failure triggered, keep an eye out for that pullback, right? And what I have to do is always wait for that pullback potential. And again, it's only if you have enough space, right? If this thing obviously pulls back down inside that range, you don't want to be trading that pullback pattern down inside that range. So again, it's a failure as we go up and back down in, or it's a 1, 2, 3 breakout. Mark up that high, mark up that high. And again, at that point, it'd be down at the major low, right? That creates your sweet spot, and that gives me a chance then to be a buyer right off of that low. Where would the buyers be trying to go? Probably up to that big round number, right? How about the sellers? Sell side here, right? As we go lower, right? It's a nested, it's a 1, it's a 2, and back up from there. I don't need the trap low, but it wouldn't be bad at all. How do we turn bearish through that low? 1, strength. 2, pull back to the moving average. And 3, strong move off the moving average. Mark up that low, mark up that low, up to that high, and we're selling off that high. Again, as you can see, I use the same setups, the same patterns in various ways, depending on which market, what the situation looks like. Once you learn the basic principles of this trading strategy, the strategy is really easy to learn. What is not so easy to learn, as you probably have already learned, though, or noticed, right, is the markets, right? The markets are complicated sometimes. That's why I said earlier, learning to trade is a lot like learning to swim. You can't read a book about swimming and become a great swimmer. You've got to go out there and actually do it. There's lots of trading opportunities, lots of great setups we find every morning in our trade room, right? The hard part, though, is really applying it to a real chart. That's why we get together every day in our trade room, 8 o'clock Eastern time, Monday through Friday. I want to see you there, right there with me. If you love my newsletter, if you love the free classes here at School of Trade, you're going to love being a client as we peel back the curtain, give you all the fine details, all the tools. I'll give you all the cheat sheets and the checklists that we use to qualify each trade. And you can join as a brand new member and get registered for tomorrow morning by following that button right below the video tonight for the advanced course. The advanced course is all inclusive. It includes the beginner, the intermediate, and all the advanced classroom sessions. It includes daily ongoing training, a very, very lengthy archive of classroom training recordings, and of course we do it together every morning in our trade room. So get started, get registered. Don't waste another day sitting on the sidelines, or even worse, sitting in the red right now. It's not fun to lose money. The best thing I ever did was start working with more experienced traders earlier in my career, and I hope I had a chance to work with you as well. If you're not ready yet to become a member, right? Maybe you're here for the first time today. Make sure you grab that free course, or just register for our free trial. As part of the free trial, you'll get access to our free trading course, our free pass to attend our trade room, which everybody loves, hundreds of chart examples of real setups, and not to mention, right, I'll send you little previews of all the course material as well. Tons of value as part of that free trial. Grab that free trial, and don't forget, when you register for the free trial, you've got to check your inbox, and sometimes that first email gets stuck in your spam folder, so check your spam filter, your junk mail, promotions tab in Gmail, and call me if you have any questions. That toll-free phone number is right there, right next to my ugly mug, and I've also got that live support tool in the lower right-hand corner of the website as well. So plenty of ways to reach out and get help, plenty of ways to get started as a new client, or just to get started by learning the basics of this strategy with our free trading classes. And guys, hope you learned a ton tonight. Don't forget, give me some comments in the comment section below. Thumbs up if you liked the video tonight. Subscribe to our channel tomorrow morning, 8 o'clock Eastern time. Be there or be square. And as always, guys, it is such a great privilege to teach and trade with you every evening on this newsletter. Now get out of here. Get some rest. We get some work to do tomorrow morning at the opening bell. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.